record already. Okay, now it record already. That means if you want to watch back, right? It's really easy for us to watch back. Okay. This seminar, right? The theme of this seminar is I want to show, right, the process, analysis process that people that want to invest or speculate in the market must know. Why you must know the process? Because if you are jump in the market, right, you always want some, I think more than 60% of trader in the market always focus on signal, only signal. That means they also want to, what is signal to buy? What is the signal to sell? But they don't care the process to get the result. The process to get the result is very important. It's very important before we investment or put our money in the market. Because if you are success, yes, it's good. You may don't care how to improve yourself because you always win in the market and always earn money from the market. But in opposite way, if you lost money, for sure, nobody can become winner over the market. We also want to improve ourselves. How to improve? Improve your mindset is good. Improve your methodology by change your trading style is good. But the logic, right, and the process inside you also need to change. Sometimes maybe, oh, sorry. Sorry, my vacuum cleaner turn on automatic. For the lazy, right? Lazy people also need the automatic cleaner, do it every day. Yes. Okay, come back to our topic. We always need to improve, right? And adjust our methodology and our process to matching with any market situation. That's why we try to do this seminar, right? In the right hand side of you, right? If you remember, yeah, I think some of you already remember, right? We also try to indicate our member performance by examination. Examination is mean we would like to test, right? After we open class, we have the teaching process. How about the result, right? How about your competency base that you can know, understand, and can explain the theory? Because if you say, hey, Sifu, I'm know the theory, but actually you cannot explain, you cannot translation, right? You cannot catch up the significant significant point in any factor, in any component. That means you don't know, right? Because you should apply your knowledge in the market. This is why we try, right? As in the slide, right? We also put, right, Bloom taxonomy revise. That means we apply Bloom taxonomy for a long time because Bloom is a classic theory that identify about cognitive domain. Cognitive domain, that means we would like to know, right, about our intelligence in decision making. Because after you learn theory, right, you can remember it or not. You can understand it or not, or you can apply it. Because apply it is a minimum requirement in the market. Because theory and practice is different, as you know. Theory and practice is different. Why is different? Because after you learn, right, a lot of theory, but in the real life, right, chart is different from theory. chart is different from theory. Why different? Because when you learn theory, right, chart is very smooth, right? Not fluctuate too much. But when you want to apply your theory, maybe in normal product, maybe Malaysia stock, you may boring. I want to tell you. Why you boring? Because liquidity is very low. That means you also need to adjust, right? Hey, I cannot apply this kind of knowledge in 1 hour chart. We also need to change to 1 hour or maybe sometimes daily chart. No, sorry, weekly chart, for example. Or sometimes, right, your product is really fluctuate. They have a lot of pincer above candlestick, right, above and below. That means you also need to change, right? You also need to adapt your knowledge, right, to catch up signal in time. That's why we try to do this. Okay, this is the picture that I want to show you about the previous of symposium. And I hope to come back Malaysia again if any situation is good. Yeah, that means my mother is healthy enough for me to leave her alone. Yeah, because now my dad only passed away, right? That means she only me alone. That means I need to focus on this. Maybe it's quite difficult for me. Yeah, I also dream about to bring our member and our student in many countries, right, to share idea together. This is our objective. Okay. Before we start, right, I would like to notice and repeat the knowledge, basic knowledge about art trading methodology before Aileen and T, right, share the idea how to apply system thinking in art methodology. That means Aileen is in charge for this topic. After that, T will come to back up about Bloom taxonomy. Yeah. Why Aileen come first? Because she is lady. We always support lady first. And I would like to thank you. I know Irene and T is very busy from sorry Irene. I also remember both of you, but sometimes confused about name. Yeah. I already understand both of you are very busy, but I'm very happy as a seafood, right? When I ask for help, both of you always support it. I think for in terms of seafood, right, I really appreciate about this support because you know, right, we try to put our effort to deliver some knowledge to our student, our friend. After that, after 3 years apart, our friend, our student, and come back to share the knowledge again. Yeah, knowledge is always dynamic. That means previous 3 years and now maybe it's a little bit different. Knowledge should improve. That means if you are our member that didn't update more than 2 or 3 years, that means today, right, you may find something already update, already changed, because I believe that knowledge is dynamic. Dynamic is mean you also need to adapt or change something to catch up and or to understand the market too. Okay. Let me some quick summary before Aileen start. Yeah. Come back to our theme, right? Why we put ARTT. Yeah, because we start to deliver our knowledge based on art. ART first art. That means it look like good morning, Cole. Yeah. We start with art. Art is based on methodology, right? Methodology that we use as a tool to explore, right? To understand the truth. The truth is for example, if you want to know, right, what is the methodology, what is the method to make us understand market. Yeah. For now, we only have two methodology, right? The first methodology is based on quantitative method, right? That means we already know, right? The people that apply indicator that belong mathematic formula is based on this kind of method, based on quantitative. When we jump in the market, we are so very familiar with the wording one trading is mean they based on quantitative method. That means they believe in what they call deductive method. Deductive method, that means they always believe that one indicator or one black box also can apply in any market. And people that believe in this methodology, right, believe in quant, may be not what they call keep distance between your bias and market, because when you apply, right, black box, that means you apply mathematics that you believe this black box or mathematics will help you to translation, right, information in the market and let you know, maybe by translation in some code, right, upper bound, lower bound, or by number, right, 1, 0, plus 1, minus 1, something like that. But art is different. Art is in opposite way, because if you take a look on the picture in the middle on the screen, right, you also see that, right, to do decision making to get the output, right, you also need to apply what? Apply yourself. Know yourself. Know yourself what? Know yourself because you want to know, right, who you are. You are long-term investor or you are short-term investor. Yes, we already record. Yeah, no problem. Thank you, Melissa, to notice me. Yeah. Okay. You need to understand yourself because different people, different trading style. That means we cannot copy and paste. We cannot follow. Yeah. For example, maybe you really impress Aileen. Aileen is a good speculator, but sometimes because of you are based on long-term investor, but Aileen is a really good speculator because she wants to trade every day. That means if you try to copy this kind of character, I'm not sure if you are really good people that can adapt in every situation. Yes, you can do it. But if you bet on yourself, right, I think it's quite difficult for you to follow her because different trading style that means it's quite tough for you to follow. That means yourself is the first criteria that you should understand, right? The second one is theory. Theory can reflect very simple. After some of you, right, try to join our examination, you also understand, right? When you compare with the criteria of examination, right? Criteria of examination. AT, you remember or not? What is a criteria if you want to pass when compared with the 100 score? Yes. If I'm not wrong, it's 70%. That means if you can pass only 50, you can get score only half. That means you cannot pass the examination because 70% is our criteria. Same, if your knowledge, right, same as the accuracy of any component that you want to apply in the market. If you, what they call, try to apply the component or factor, right, that have accuracy lower than 70%, lower than 50%. Do you think that factor can apply in the real market or not? No, cannot. That means we should set the criteria as much as we can. Actually, in my dream, right, I want to set up 80, but I'm scared. After examination, right, nobody come back again because criteria is very high. Nobody, everybody boring, yeah. And after we apply, hey, before we continue, I would like to thank you, Irene, for very beautiful graphic that I'm applying for now, because from the book, right, foresight for the book foresight, right, Aileen helped me for edit text, and Irene helped me for create beautiful graphic. Yeah, thank you very much. Because if I do it by myself, right, I think the standard will lower than this. Thank you, Irene. Yeah, welcome. Okay. After we understand ourselves theory, right, we also need to concern about market context. Market context is very important because after we collect information, right, correct information in the market more than 20 years. Yeah, as you know, right? Yeah, I'm also your seafood and also trader, but in opposite position or in another position, I'm also researcher and lecturer in university, focus on education and financial engineering. That's why I also do the research. After we do the research, parallel with my trading experience, I found that, right, every people that dream to make money every day. For example, the people that dream to make money every day from the market, right? I want to tell you, this concept, right, or this mindset may be mistake because of when we learn technical analysis, right, we learn pattern, right? We learn pattern and we recognize this pattern to apply in the market. But if you try to trade every day, that means sometimes your pattern that you learn is not happen yet. Pattern needs candlestick. Candlestick need timing to accumulate themselves to create, to become pattern. That means if you want to trade every day, right, and you focus on pattern, it's not happen yet every day. But if you try to apply only candlestick pattern like a reversal pattern, that means you try to focus on low priority signal to apply for your entry and exit. It also make you loss. That means to become trader, right, you also need to wait. Like a lion, right, waiting their prey until they already calculate, right? When we watch the geography, right, you already know, right, the lion or the hunter, right, may wait until the prey is coming in their distance. That means if you are lion, maybe your performance can move very fast to your prey limit at 50 meters. That means if your prey is longer than that, the distance longer than that, accuracy that you the percentage that you can hunch may lower. This is a point that you should understand. That means if you, after you learn, right, any technical analysis for a long time, and you found that, hey, I found I'm also mistake, I also cannot make money in the market. You try, I think I suggest you to try it again, but focus only one time a month. You look at the base of that correlate or matching, right, with your knowledge, but only one time a month, looking that signal. After that, you start to trade. From my experience, right, if your knowledge is okay, your theory is okay, you have set up everything okay, I think you have chance to earn. But if you try to focus to make money every day, right, I think it have chance to earn if you are good trader, better than me, but it's quite difficult. I want to tell you, maybe you work hard, right? We prefer to work smart, not work hard. And another thing, right, that Irene will tell you more is system thinking. Why I interested in system thinking, right? Because when I start to share the idea of art trading methodology, you always know, right? I start to teach you 4 knowledge, right? We teach you Y component, we teach you Fibonacci, we teach you candlestick and power, right? That mean, right, these 4 of technical analysis component may need to work together, link together. That means on the last of the education, right, as in the last of I show you this, in the last of the learning, you also need to understand the combination between every component. That means in art trading methodology, we call ladder map. Ladder map is very reflect your understanding, right? Based on market situation, based on market context, right? You also can see uptrend, downtrend, right? Uptrend, downtrend also have trend. Trend also have strong uptrend or weak uptrend in uptrend, and also strong downtrend and weak downtrend, right? But inside strong downtrend, they also have strong downtrend that not hit target and hit target, and they also have real and fake. That means if you already know all these concepts, yes, it may be easy for you to have your trading plan. Yeah. Again, thank you, Irene, to make the beautiful graphic again. I don't know if I want to do this myself. Right? Maybe I take around 1 or 2 months to focus on this and practice. Yeah. And something that you must know, right? I focus on. Okay. Hey, Aileen, do you mean your graphic or your face? I think after you update your profile. Okay. On the sorry. On the right, on the right hand side, right? We also have show you 2 circles, right? The circle, the red one is independent variable, right? Independent variable is mean in our methodology, it belongs art trading methodology component. That means it belongs Y component, it belongs Fibonacci, candlestick, and power. Yeah, that means in this case, right? For JS that already coming, right? We also have video record. That means you can watch it back in future. Okay. The green one that intersect between independent variable and dependent variable is we can call your performance or your accuracy. That means after you try to start your trading journey until, I don't know, maybe you start 3 years ago, or you start 10 years ago, or 20 years ago, your effect, right, or the green color should increase every year. That means your accuracy, it should more and more, right? More and consistency is come together. If your accuracy to analyze market is more, but your consistency is low, that means something wrong already. Maybe sometime when I young, right? When you earn money, continue 5 day trade, never lost. But maybe 6 day, the day 6, right? If you more confident, right? That means the money that you lost from the day 6, maybe cover or 5 day that you earn. This is just my experience. That means you also need to consider, right, your accuracy or your performance based on the green color. The yellow is your error, right? That means every time if you not jump in the right time, in the right timing, you also met the error. Error is make you lost. Loss is mean you come in the right track, but your target is that you set up at your plan is further or more than actual. Yeah, you wait until your performance less change from win to become loss, change from earn to become stop loss or something like that. That means this kind of characteristic is reflect your performance and your practice. And our trading methodology, right? After we apply system thinking that may help people to link each factor or component together. You also choose the right timing or the right time frame to analyze. This is very important because when I start, right, to share my technical analysis idea, a lot of people always ask, hey, Sifu, what is the time frame that you apply? Actually, when people start to ask this question, I think it's very simple question for newbie that want to start to practice in technical analysis. But if you have experience more than 5 years, more than 6 years, but you still ask this question, that means something wrong already. Because if you have experience, right, you already know what is the right time frame that you always monitor, because different products also have different time frame for trading. It depends on you are a long-term investor or you are speculator. That means after you have knowledge, you also need to find or must find the right time frame too. And because of technical analysis is based on information, right, in the past and present. After that, we try to apply this kind of information, right, past and present, to compare together and to predict future. That means when we mention about predict, yes, we are different from trader that based on quantitative, because we are qualitative. Qualitative is mean your prediction is based on your experience, not based on methodology, based on your experience. That how do you understand the methodology? That means predict, accurate or not accurate is based on yourself. It depends on how you organize the information that you get and that you watch from the market. Yeah. After you predict, right, what happened in future, you also need to generate, right, the possible scenario, right, that become your trading strategy. That means we cannot say that in the one product you also have same strategy. It's impossible for art trading methodology. Art trading methodology is already focused on qualitative. Qualitative is mean if you have different experience, right? You have different understanding in theory. You also focus on different product to trade, right? And you also prefer to trade in different time frame. That means your trading strategy is different. That means you cannot copy and place for trading style. That means this is a big differentiate or contrast between art and mechanic trading that based on quant, not based on qualitative as us, okay? And as you know, right, if you are really basic what they call basic trader, right, you may not understand this graphic. But if you can claim that you are the real art, you must know, right, what is the meaning in this graphic. This graphic, right, already reflect and already show you about how many components in art trading methodology and what is the significance of or art trading methodology, right? Because when you saw, right, the line above, you already saw, right, in the real line, the same line in same horizontal line, you also found Dow theory, Y component, Fibonacci, and candlestick in the same line, right? And below candlestick, you also have two pattern candlestick, right? Continuation and reversal pattern. And the lowest line identify power. That means power is cover or Dow theory, Y component, Fibonacci, and candlestick. That means power needs more information to combine to become themselves, right? This is the point that you must know. Okay, this is the radar map. Okay, this is the timing that this is the end of my presentation. The next presentation is Aileen. Sorry, Irene. I always do something mistake. Okay. Okay, Irene, this is your turn. You also can share the slide and start your present now. Thank you very much for joining us and spend your time to do really beautiful presentation. Thank you.
Good morning. How to search? Wait, Hey, good morning, everyone. This is good morning. I'm Aileen from Penang. So I see a lot of our friends last time. How are you guys doing? Hope everyone is doing good. So my topic is on systems thinking, how to apply system thinking to improve stock market technical analysis. So next. So again, let us revise some ARTT components. As I see the participants, most of us is from the old students. So I assume all of us know all the components. So, but maybe we do some recaps before we can go to the more complicated system thinkings. Okay, so ARTT components includes Dow theory, Y components, Fibonacci, and candlesticks, and also the power. So basically, when we apply art methodology in our trading, usually we will use all these components to help us to analyze the chart. So some revisions. that we use the Dow theory to identify the market direction. So if let's say we look at the chart, we want to know, basically, we need to know like how is the market direction. So in order to know if whether the market is uptrend, sideways, or downtrend, we use Dow theory. So in details, I think we just need to go back to our notes, then you will know how to apply the Dow theory. Then after that, we use Y component. So Y component basically to determine whether if the trend is strong or weak. For example, if uptrend, Y2 longer than Y1, then it is a strong trend. If Y2 shorter than the Y1, then it is a weak trend. Okay, and then after that, for the Fibonacci, we use Fibonacci to identify the support and resistance. Then after that, we can also use it to identify our target, the profit target, or the hit up target, hit down target. And then the most important things to use in Fibonacci is we want to know whether if a trend can continue or not. For example, when the trend is uptrend, if let's say it hit the target up, hit up target, then the trend will be continued. Okay, so this is very useful because market is always dynamic and we always need to measure the Fibonacci to know the trend, whether it is continue or not continue. Then after that, we add components also includes the candlestick. Usually we use candlestick to entry and exit. So if let's say all these components, the interaction, we analyze the interaction between the components, and then we use the candlestick, the head of gangster, and also the reversal pattern to make the decision whether we want to entry now or exit now, or entry, when to entry. And then after that, after all these components, we also got another components called power. Power is good for big time frame to estimate the profit target. So in details, all this, I think all of us already know how is the principle and how is the knowledge. So we just need to go back to our notes. So this is just a recap. Okay, then now we go to system thinking. Well, if let's say I talk so fast, maybe less than half an hour, I can finish. Okay, so
Hey,
now
you cannot finish very fast because he not ready yet.
Okay, I try. Okay, now we talk about the system thinkings. Again, look at this chart. This is an overall system thinking chart of how we apply the art trading methodology in our trading. So usually, when we look at the chart, it is the input. So then after that, we look at the chart and then we start to analyze. We start to analyze. So when we process the information, the info that we get from the chart. So it involves yourself, the theory that we learn, and also the context that we look at. And then our mind will do the systems thinking, process all the information, and then you will take action and you know what to do. This is the output. Okay, so system thinking basically it is an interaction of the art components. So like what I said just now, we have already learned all these components, the Dow theory, the Y component, Fibonacci, and candlesticks. Then we interact all these components, the relationship, and also the interconnection of these components, and it generates different output for you to take action, to think what to do. Then after that, also we look at the context, where to apply, then we will know what to do. So the interaction of the art components, then the context of the analysis, meaning that are you applying it at the downtrend a trend or where do you apply in the chart. Then after that, we identify or determine the area of the analysis. Then we know where are we now, what to do. Then we always ask questions to how to say, that means you ask yourself questions when you look at the chart. Will it go up? Will it go sideways? Or will it go down first, then after that go up? So all this you have to keep on ask yourself. Then after that, you from the chart, do you get the sufficient information or not? If let's say the information that you get is sufficient, then automatically you will generate a few scenarios. After you can able to generate scenarios, then we can plan out what is your trading plan. Then after that, it's easy already. You just execute the plan accordingly and then take action, and then you do some money management. Then after that, you see your result. So basically, the process information, the information processing process is like you link yourself, theory, and also context to the system thinkings. Because all this, yourself, theory, and context, the level of the theory that you know or your experience, and the context that you apply, correct or not correct, and yourself, whether if yourself is fit to trading or not at that timing, it will affect your system thinking, and all this affect your output. Okay, so now we talk about yourself. Okay, for the yourself, to me, what kind of person are you in the trading is very important, because that means, like Sifu said, we need to understand ourselves, because our personal behavior actually is the key. Because if let's say you are a fast and agile person and you like to be fast in trading, then maybe your trading style will be like a day trade or a session trader. But if let's say you are kind of person like slow and steady one, maybe your style is more to investment. So ART trading methodology is very flexible. You can apply it in a very small time frame to like trade for the short time frame, but it also can apply in the investment for the midterm investment, or also the long-term investment, which is like maybe like in Malaysia stock is slow and steady. So you can apply this knowledge into this market also. So and you want to apply it fast, or you want to trade it for short term or long term, very depending on your personal style. Because some people are very busy, they are not suitable for like trading in a short term, and also not suitable to trade those very fluctuate commodity or the product. It depends on your lifestyle also. But if let's say you have time and your mental is strong enough and emotion is stable, then maybe you can go for like short-term trading, because you want to get more profit or attain more profit in a very short period. Long-term is not necessarily long-term can be very huge profit also, but it needs a lot of patience and time. Okay, so it is very depending on your personal lifestyle and also personal behavior. Some can do both. That means because like for example, myself, I do both, because like I'm a quite busy person, but then so I apply like midterm and long-term investment in Malaysia market, but then I trade in like FCPO and the more fluctuate product lah. So secondly, on the yourself also, we need to very clear about our trading objective. So when we trade, first we need to know what do we want. For example, for the long-term, midterm, you know, when you just want to invest and then you just buy and hold for a certain period, then you go for long-term. Then what you want to get from this trade, you must know around how long you need to hold. Okay. Then for the trading one, you also need to know what is your trading objective in this product. like maybe we plan like I want to attain gross income of like 1,000 a day, then you need to think whether if this product can generate this kind of income for you or not. Or maybe some product can like 1,000, you want to trade for 1,000 for a week, or you want to trade for 10,000 for a month. So we need to know what is our goals. Without all this goal to put into our mind, actually we can't generate an outcome. So to me, the goals is very important, because once we know the goals and clear about the goals, then we can make it into action plan. Without the goals, previously I think it is very hard for us to achieve, because if let's say we don't know the goals, then you would don't know what you want to do actually. You just don't want to trade, but then you will maybe kind of blur that how much I actually want to make. And sometimes because due to the market is very volatile and is also dynamic, sometimes what we plan also is what we plan and what action we take, you might not able to get the goals. So in order to get the goals, we need to always like do the corrective action, to always revise our action plan until we can get the goals. So to me, goals is very important. The objective is very important. Without this, if let's say we just trade according to the market, then the outcome may not be so good. So after that, about the yourself, also very depending on the emotion, the mental healthy of that stage. For example, if let's say you want to go for the short-term trading, then that time your mental and emotion must be stable. If let's say your mental and emotion was hurt previously due to some issues or due to some trading bad experience, then you have to stop trading for a while and then make it like recover, and then you find out all the reason. Then after your mental is fit back, then only you can go for short-term trading again. This is quite significant, because when your mental is very screw up or very like emotion not stable, if let's say again you go to the short-term trading, you trade for the very volatile product, then the outcome will be very bad. Okay. And also it depends the time allocation. Yourself is very key important. That means if let's say yourself do not have the time to trade, then don't trade. If let's say yourself have the time to trade, then have to be focused and allocate the trading time to trade. Okay, we cannot like for the trading in a short term especially, it is not suitable that you go to work and then you have other things go on together, and then we can concurrently we do the very volatile trading. It will stress yourself, and then you will collect all the bad experience. Then after that, all this bad experience will impact your outcome. Then another one is the knowledge and the experience. So yourself, because every individual have their own knowledge and also experience. Knowledge we can like, okay, that's for this in ARTT, then we base on the ARTT knowledge. So that means the how much detail you know about the components, and you know the principle of the components also affect your trading outcome, and also your experience. That means your experience on the market movement. So you know when the market something wrong somewhere, you can act very fast accordingly. So this is your experience also. So all this all this that I mentioned previously impact your systems of thinking. Okay. Then after that, we talk about the context. So different contexts or area of analysis will lead to different operation and decisions making. So like just now what I say, the yourself very important, because after you know yourself, you know especially the trading objective, then it will lead you to area of analysis. Because when you know what you want to do, what is your objective, then automatically you know where to identify the area of analysis. When you know the area of the analysis, then you will know what to analyze, and then after that it will lead you to different operation. That means different style of doing different operation and decision making. So this yourself, your trading objective, you'll determine, like you were looking at the big time frame or small time frame and identify the area of analysis. For example, the context. When we look at the chart, some people will look at overall, but some people will look at the blue box, and some of the people will look at the red box. So this is different and very individual. And all this is determined by what is your objective. Like for the long-term one, they might look at the very overall picture, and they are planning, because when we talk, especially when we talk to our friends, usually if let's say we have different objective, then we will talk different time frame. Okay, so what do you want will lead you to will lead you where do you focus, and different focus will give you different strategies and operation. Okay. So now we talk about the theory. I will not go into the details, but basically to support our analysis, we need to be strong. Okay, so basically for the theory, we need to support our analysis. We need to be strong to ensure that we do the correct analysis. In order to do the correct analysis, we have to be strong, and we have to be detailed and clear about what these all components meaning, and what is the how to apply it correctly. Okay, so we cannot have our own opinions, because opinions meaning that, because when we apply art, we have to based on the principle and the theory to support the analysis. If let's say we maybe in the news, we see some opinion, and then it is against our theory, then the opinions will become the noise that will influence our decisions. So the best is that you have to be confident on the theory, then you're confident on yourself that how to apply the theory, and then you just do it. Whether if you correct or not correct, actually the market will tell you. For example, let's say maybe I use the Y component correctly or not. If let's say I apply it into my trading, something wrong somewhere, I get losses, then what we do is we revise our trade and see whether, if that means double check whether my theory is correct or not. Sometimes we might be blur that we apply it incorrectly. So always, actually, trading is very personal and individual. It's you and the market. Sometimes it is not the fault of the theory, it's the fault of ourselves that we apply it wrongly, or sometimes we apply it correctly, but the market changed too fast. That means it changed, especially when, like, for example, in FCPO, it changed like even in a minute. So if let's say you apply it correctly, but the market changed very fast, so your mind and your action also need to change very fast. So when you apply the theory also, you also need to see like your skill. like let's say how fast you can think and change and apply it in the real chart. So if let's say in a stock, then it is slow and steady lah. So if let's say the market change, also you have more time to see it, to double check if your theory apply it correctly or not. But let's say if in a very fluctuate product, then you have to be very good in your theory, and also you need to know why it is changed, and then you have to, like for the Fibonacci, you have to keep on measure and measure and measure, because once the market direction is changed, then it changed everything. Okay, and then next we go to the systems thinking. So if let's say you compare to the classical technical analysis and the ARTT system thinking, what is the main difference? To me, if let's say for in the classical technical analysis, you will find that many signals and indicators, generally, they are not interconnected and do not interact with each other. It's like all these circles in different colors, they are very individual and independent. For example, if I say like signals or indicators like the moving average, and then maybe the Bollinger Band, and all those other classical technical analysis, they usually apply it independently. They do not interconnect each other unless you connect it yourself lah. Otherwise, usually they are very individual and not connected. So when we analyze, the indicators might be against each other, but you very hard, or maybe still don't have anyone to like do the research on the interconnecting relationship. So basically you will see generally they are not interconnected and their relationship is independent. Okay. And then for the system thinking in ARTT, the difference is their interconnection of the ARTT components is they interact between these components within the time frame, and also we also analyze the interconnection and the interaction between the different time frame. For example, if let's say for a more fluctuated product, like in the FCPO, in day, the time frame in a day, you will analyze from Dow theory, Y component, Fibonacci, candlestick, and power. All this we need to like link every each components. What is the relationship? For example, the Dow theory, it is a, let's say for example, it is a downtrend, and then for the Y component, it is a strong downtrend, and then we see the Fibo, oh, it is hit down. So, and we see the HOG at the third floor, then you know all these components give you the message that this is a very strong downtrend. Okay, and the trend will be continued in this time frame of the day, for example. Then after that, we need to link to another time frame. Another time frame is maybe like the 15 minutes chart. So in the 15 minutes chart, sometimes it will opposite. The Dow theory show uptrend. The Y component show strong uptrend. Y2 longer than Y1, and the Fibo show hit up, and also the HOG show white HOG at the third floor, a very strong uptrend. So how we link this, that means the very different scenarios in the same product from the time frame 1 and time frame 2. That means the day and the 15 minutes. So after that, we know two pictures, and then we have to interconnect their relationship. That means if let's say from what I say, maybe it is a rebound, it is a strong rebound in a very in a day chart. Okay, and after that, another time frame, maybe you are trading in in a sessions. So maybe you look for like 5 minutes or 3 minutes or even 1 minute, you will see different story again. So you see, this is a very special systems thinking that we need to generate, because each time frame give you different information, and then your responsible is to link all this information together and analyze in a very holistic and overall picture. Then you know what is the story about. Then more important is you need to ask yourself what actually you want to do. You want to trade it in a long time frame, or you want to speculate. So when you don't know what you want to do or what is your objective, even if you analyze so much, you also don't know what to do. But once every time when we trade, we know what is the objective, then you will know what to see and what to know and what to do. So this is the process. This is the art system thinking about. Okay. So generally, system thinking's meaning is a critical thinking method to analyze the relationship between ARTT components and within different time frame. The decisions usually are not made based on just single signal from any one component alone and at the one time frame. That means to attain, that means to increase your accuracy or to increase our profit, not profit, to increase our winning rate, we must always think very holistically, meaning we have from the big picture, we see the midterm, and then we see the small one. Every time frame, we know the story. Then you see what you want to do, then you just take action accordingly. So for the time frame, usually for the non-24-hour products, then we will go to the day chart, 1 hour chart, and then 15-minute charts and 5-minute chart. For the 24 hours product like the, Dow Jones, the Nasdaq, and so on, or other product like the golds and Bitcoin and so on, we go for day chart, 4 hours chart, 1 hour chart, 15-minute chart, or even 3-minute charts. It depends on your needs. Okay, so until now, may I know, do you all have any questions or not? Okay. No problem. Okay, so now we go to the application. So the main idea of the systems thinking is how we think, how we link all these knowledge components, and then we generate ideas on how to trade. That means how to apply in the real chart. Okay. So I give an example, a very simple example. For example, this one is for the mid-long-term objective. So first, when I open a chart, we see the overall picture. Okay, so we see the overall picture so that we know, we get the whole picture idea. So this is called context analysis lah. So we see the whole picture, and then we identify the area of the analysis. We select the area that give us important information that can aid in our analysis. For example, in this chart, hibiscus, because like in the left-hand side already passed. So now the area analysis will be the right-hand side here. So after we see the chart, first we need to apply the theory lah. So for example, for like what I said, this is a midterm investment. So it might take a few months or maybe years. Okay. So at first I need to know the market direction. So I apply Dow theory. So when we apply Dow theory, when we see like the circle, the chart already make the higher high and higher low, meaning from this onwards, the market already show it is an uptrend chart. Okay. Then next we will do the Y component. So when we see the Y component of the chart, we identify the Y component. So we draw the Y1 and Y2, and then we identify whether if the Y2 is longer than Y1. So after measure, the Y2 is longer than the Y1. So it means that it is a strong trend. Then we start to, we next to apply is the Fibonacci, because once we know, oh yeah, it is an uptrend, it is a strong trend, then we want to know if let's say the trend can be continued or not, because now it retraces. So we measure the Fibonacci, and after measure, the Fibonacci is already hit up the target. So ABC hit target up, meaning that the trend will continue. So, and also when we use these components, it also says that when the price retraces, then we will need to plan to buy. Because when you measure, if let's say you want to measure the hit down target, the hit down target is very far away. So what we know from this information is this product can generate some profit because the uptrend is already formed, and it is a strong trend, and also the hit up target already hit. So you can go for next analysis. So now we come to, because you already know what is the objective. You want to earn some money from this product for mid-term time frame. Okay. So now you ask, that means you keep on asking yourself. So now you ask yourself whether if let's say this retracement finish, can we buy now? So now we start to change time frame from the week time frame to the day time frame. So from like in the picture, you see the retracement. But first, don't act first. Usually we need to think. You need to ask yourself, is this retracement finished, and when can we buy? So we change time frame to day to get more information. Then if let's say we see when we see in the day chart, okay, we perform check on the components. That means we see the day chart, the area of the analysis, whether it already make a higher high or higher low. So from the chart, you will see like the chart already make a high and higher low. Then after that, that means it start to turn it into a uptrend. Okay, but it haven't do the higher high. It just made the higher low. So you see, sometimes when we analyze a chart, some information is sufficient, but some information may not be sufficient. So all this information, when you gather, then you will generate the idea that what action that you need to take. So in this chart, it make the higher high, it make the higher low, but it haven't make the higher high. Okay, it might be go sideways, because if I say it make a lower high, then it will go sideways. So you will that's why I say every component is important. You know, you will always need to anticipate and know everything can be happen in trading, because market is dynamic. Our idea is we want to buy, but then maybe we will interrupt ourselves, because we will think that, oh, if let's say best, it can do the higher high, but in fact you need to be present. That means you see the chart. The charts haven't shown the higher high, but then if let's say you already plan to buy, you know the next it must make the higher high. If let's say the chart turn anytime on the resistance, that means the timing is not yet come. So this That means this is the risk that we need to aware, but we keep it into mind. That's why I say every single information generated in the chart give you what to do. Okay, so now you know this chart just make higher low, not yet make higher high. Okay, but when we cross-check the Fibonacci A, B, C, it already hit up. So you see the Dow theory, it haven't made the uptrend, but then Fibonacci already said hit up. So you will need to ask yourself, is this going to make a Y2 longer? Okay. Okay. So this is, that means you see the Dow theory, you still left a higher high to confirm. And then but the Fibonacci already give you the tips that it already hit up. So now next is you want to know, you don't know yet this price movement will make the Y2 longer or not. Then next you will need to ask yourself, can I take actions? Then where is my profit targets? Where is my stop loss? My stop loss is, that means where is your risk? Okay. And also beside that, also you need to anticipate if in case now you buy at the resistance, it turn down, that means it will do the lower high. That means it's still in a sideways. So how long? Maybe you have to wait for some period because it will continue sideways, because it may also do sideways down. So always when we analyze and we get the information from the chart, don't action first. We need to then generate different scenarios, meaning that when, if let's say I plan to buy this, you need to generate the scenarios that when the price go up to the resistance, what if it is not making higher high, but it making a lower high, then the price start to turn down and then it continues sideways. Then what is you have to also generate another scenarios that what if the price go above the resistance and then continue, that means it is going to do the Y2 longer. That means you have a long way, you have a longer Y2, that means you have more profit. So you have to generate a few scenarios and then you act accordingly, because market is always dynamic and change. What we can do is we also need to change accordingly, and then we always need to look at our risk and rewards ratio. For example, like if let's say the market already make the higher low, of course, we wish that we hope that the price will go up and make a longer Y2. So your risk to rewards ratio will be good, but it will change the whole picture if let's say the price at the resistance area, it turns down, then your risk to rewards ratio will become your risk very high, because the downside is very huge and the upside is just from here to the resistance area. So, and you generate your scenarios. You want to wait until it make higher high, or you want to buy now? If buy now, what is your risk? And what if the price turn? What to do? You just exit, or you don't want to exit? Because sometimes your mental not allowed. That means you think you want to exit, but then your emotion and your impact your action. That means you don't want to exit because you want to wait. Then if let's say you want to wait, then that means your profit will become losses. And sometimes it's not losses because it's sideways. That means you want to stand the sideways and then wait for a longer term. Then you just hold. It depends your personal that means risk appetite. So and next, so this is an example for the chart, that how we apply into the chart. And this is the example for a midterm. For if let's say for the short term one, that means like for example for the FCPO, that means you look the day chart and then you analyze the 15-minute charts. Then after that you analyze the 5-minute charts and 3-minute chart and 1-minute charts. Then depends on what you want to do. Then you just link all this information, interact each time frame, interact between all these components, and then combine. You gather all the information that you have, and then you analyze, you think what you can do and what is your risk, what is your ratio of the risk and rewards. Then only you take action. So this is the system thinkings that we are talking about lah. So I think this is all my presentation.
Wow. Thank you, Irene, for your
So
share.
I thank you everyone and wishing all of us success in our trading endeavors. Okay. Thank you.
Thank you very much. I want to tell you, right, is this kind of presentation is very amazing because as a seafood, right, I'm really happy to like a destiny, right, to bring us together because in terms of seafood, right, we also want student that have potential enough to deliver our knowledge, right? You is one of the student that really good for presentation and follow our methodology and want to understand our methodology. Irene, can you go to the slide number 8?
Wait. 8 ah?
8. Yeah. Okay. If all of us, right, try to focus on this picture, right? This picture already tell you some the secret, as Irene told you before about how to identify area of analysis. Because sometimes, right, people are always confused, right, about how to identify area of analysis before we start to analyze any financial product in the world. One thing, right, from this kind of picture, right, you already saw, right, the ARTT is a combination between 5 components, right? For example, Dow theory, Y component, Fibonacci pattern, A or HOG or power. That means this already include the or signal that necessary for you to apply. That means if you want to identify your area of analysis, that means your area of analysis should show you, right, all of this signal. All of this signal, that means if you want to identify area of analysis, that means your area should cover power, Dow theory. Right? Dow theory, that means you also have a significant movement about minimum 4 points to identify this kind of movement, maybe uptrend, downtrend, or sideways, right? This is a very important. That means if you don't know how to start to identify your area of analysis or your context, you also need to identify based on our component. That means minimum 2 loop. This 2 loop maybe show you about what they call the minimum information that you can start to analyze. This is very important. Yeah. And I think for as you understanding, right, our trading methodology is based on qualitative analysis. That means you also need to practice yourself until you understand about our basic knowledge, right? Because without basic knowledge, it's quite difficult for you to start to analyze because opinion and the result from analysis process different. Opinion is mean you just what they call mention about just opinion. Opinion cannot make you success in the market because maybe 100 people also have 100 opinion, right? And this opinion is still lower degree when you compare with the tentative hypothesis, because tentative hypothesis, right, is the hypothesis that you try to monitor market and set up your hypothesis, right, until it's become theory. Art trading methodology is same as like that. We are spent for many years, right, to accumulate all information to become tentative hypothesis. After that, every tentative hypothesis always qualify themselves, right, more than a year to become theory. That means it need to what they call practice until you understand. Yeah. Before Aileen, after Aileen section finished, right? Do you have any question to ask our member, our Aileen, for any kind of question, or you don't know or you don't understand? Please, you can take, right, or you can talk, no problem. Aileen always stand by for you. Hey, do you think or not? I think your voice is not so clear. Maybe
Is it?
Work hard.
Don't know. Maybe not enough sleep.
Wow, entrepreneur is always like that. Also work hard. Yeah.
Now market is hard, ma.
Really hard, really hard. Okay. If you don't have any question for Aileen, right? It's okay. I will show you some example before T session. Okay. Okay. Aileen, you can stop your sharing. Thank you very much. Thank you very much. Okay, let me show you some information. Okay. Now, right, you already saw the chart, right? Stock Exchange of Thailand Index in 1 hour chart. Okay. Why ARTT is really serious and focused on context? Because when you start context, right? Context is your what they call frame of analysis. That means you also need to focus on the information, right, inside this. Okay. For example, right, many people always believe and always apply for dynamic X, right? The concept of dynamic X is very simple, right? You try to draw, right, the line from the top to the bottom of minority. Minority, that means if market move up trend, that means you also draw from the top to until the end of the retracement. You also have this kind of information for your reference. And the next retracement that you will apply this to become benchmark, right? That means when market is already show you significant retracement. Significant retracement is mean market already show you weak trend before that retrace, right? Market move up, this is Y1 retrace. Market move up, this is Y2 retrace. And market move up until Y3. Y3 shorter than Y2. That means this have chance to become significant retracement. But now, right, because of market is dynamic, and our art trading methodology also have human intelligence, not robot. That means when you try to apply this to this, you already saw, right, something already changed. Something already changed, right? Because when market really move and cross this line, right, dynamic X, right, you also hope market may not move lower than this point, right? Because our theory mentioned like that. But if you try to apply 3-color theory in this case, you already know, right? This is point 1, 2, 3, right? 4, 5, 6. That means you also need to measure A, B, C, right? And identify the target. That means market cannot stop at here because it's not complete yet. But if you try to do this, to readjust your dynamic X again and apply to this, you already found, right, the same error of this kind of movement. That means you already know, right, this product, financial product, is not respect what they call the dynamic X, but they also show their characteristic. That means if you know this, right, if you know from this kind of dynamic X, and you move to here and you found this kind of error, that means after price try to break in zone 1, right, but they also move lower than our benchmark. That means we call this is error. That means this chart is not respect dynamic X. That means in next time they will happen again because this is characteristic of this kind of product in 1 hour chart. But because of your identify, right, you identify the area of analysis in this area, right? That's why you have no chance to start to analyze from this point. But if you extend your area of analysis, right, the first one you start from here until now. But if you already change your analysis, area of analysis to here, move to here. If you move here, you draw this line and you move this to here. Maybe your area of analysis, right, is different, it's bigger, and you also can apply dynamic X also. This is a point that I want you to understand, right? To apply your knowledge, it depends on your experience. Sometimes when you identify the area of analysis but not cover, that means you have no choice to find some error that different from your theory that you learn. But because of we focus on human intelligence, that means you maybe no problem to readjust your area of analysis again, to change your time frame, and after that apply your knowledge again. This is the way that I want to communicate to all of you, right? Please try in different way. After that, right, try to shoot, right, what is the best area of analysis that you get the different result. After you get different result, you can analyze again. Consider by yourself which area of analysis give you more information, give you best scenario that have chance to become success trading in future if you want to set up your trading strategy based on area of analysis. But area of analysis is based on context. Context is based in the one part of system thinking. This is the idea that I would like to share. T, are you ready or not?
Okay.
Okay. Thank you very much. Before we start, right? Let me introduce some short words. I forgot for Irene. Sorry about that. After we start, right, to deliver our knowledge from in Malaysia and many countries, right? Okay, I'm specific on Malaysia first. After we teach and sharing more than 3 years, I think 3 years, we also can identify that who have potential to become our TA or teacher assistant, right? We always qualify our teacher assistant. To become teacher assistant, right, it's not mean, if who are not invited by me to become teacher assistant, it's not mean you are not good, but the teacher assistant, right, they have to qualify about the basic knowledge. That means to deliver our methodology, right, we also need people that really focus on detail, focus on methodology, focus on definition for each component. Yeah. After we qualify, after we have examination, right? We found many people that qualify, but because of time, right, and effort, and what they call willing to help, willing to support. That means we found that the first teacher assistant in Malaysia, Aileen worked with me very close and generate a lot of projects for me. But after Aileen passed away, we also adjust the new teacher assistant. That means now we have T and Irene for support me. Yeah, thank you very much for your support. And when I ask any help, right, both of them also answer really quick, right? That means I didn't suffer from any request from T and Irene. Thank you very much for support for this kind of seminar. Yeah, thank you very much. Okay, T, I will stop my sharing and is it your turn? Okay.
How to share? Okay. Share screen, huh? Okay. Okay, can see my screen, right? Can I? Oh,
Yes, very clear.
But okay, actually, let me see. Okay, actually, this should be the first part, right? But never mind lah, because we give priority to pretty lady and seafood request, right?
Lady come first.
Lady come first, Okay. Hi everybody. I'm T. I've been following ARTT since, let me think, how long ago? I think 2016. Yeah, 2016. Wow, it's been like so many years.
Yeah.
So been followed Dr.Thiti for some time, and I think his methodology, one huge benefit is his methodology. It provides us a point of reflection on our analysis, on how we think, how we strategize, and how we put meaning on each of the signals that we observe every day in chart, right? So when I follow him, then he mentored me about this kind of thinking, how critical thinking, all this kind of things, right? So he actually persuaded me to pursue a master degree lah. So what I did was, after stopping learning, right, from my bachelor degree, then there was, I think, more than 5 years. More than 5 years. Then he said that, hey, since you're very interested in learning, right, how about you pursue a master degree in psychology? Yeah, so that's what I did. And yeah, after that, very, very interested in adult learning, all those kind of things. Like sometimes he will share how all those kind of new knowledge and things, right? Yeah, so I think it's very good. It's more than learning about as a chartist or technical analysis. Most importantly, is how to improve your life and how you learn how to think. Okay. So once again, thank you, Dr.Thiti, for giving this opportunity.
Welcome.
To present myself in this symposium. So I believe that most of us been around with ARTT, right? On the left hand side is the first symposium back in 2017. Yeah, 2017. When the time Sifu has a lot of time, can travel and no restriction that time, right? I miss this kind of event. I hope in future we have another opportunity to do this. So on the right hand side was the second symposium back in 2020, 2 years ago, 2021. Yeah, the time was still pandemic, so we did it in Zoom lah. Yeah, so once again, it's good to see all of you, all the members still around with the ARTT Symposium lah. And I think it's very amazing to see ARTT has developed and grew along the years, especially the methodology, adapting to the changing market conditions. See for a lot of new ideas, and not only new ideas, but how to improve the methodology by using the same basic components and how to change the way of analysis. I think that one is very remarkable. And before I start sharing the Bloom taxonomy, I also hope Dr.Thiti also have got power to continue develop new ideas. Organize future symposium. Yeah, and also Aileen, Aileen come and support. Always good to see you, Aileen. Okay, so now I move on to Bloom taxonomy, right? Actually, I believe that all of us, when we started with ARTT, Sifu always mentioned about Bloom taxonomy. I believe back in 2016 when I first heard this idea, right, I was like, what is this? I come here to learn technical analysis. Why should I learn this kind of thing? Why should I know? But after when he slowly unraveled the idea, right? Oh, Max, can you hear better now?
Yeah, I heard better.
Oh, better. Oh, means sorry. I moved away from the mic. Okay. So, okay. So, when Dr.Thiti slowly unraveled the idea about the Bloom taxonomy, right? Because just to give you an idea, it's a pyramid, like the one holding in the hand here, and it have 6 different layers of how you think and how you learn, the steps of learning. So when I got the invitation from Dr.Thiti, right, so I decided to revisit this Bloom taxonomy. I was like, actually, what is this? So I mentioned earlier, it's a framework for ARTT methodology, right, to develop the trading skill. And its foundation, it lies very importantly in the remembering of the theory, like all of us been doing now, to remember all the theory, all the lesson before we apply in the market, right? And we start to memorize like for example, in our life, we memorize equations, definitions, rules, halfway. So everything must start from remembering okay. And the next slide here, yes, this is the pyramid. So it looks like a very simple pyramid, and it gradually moves up from bottoms up to the top, right? So actually, this Bloom taxonomy is not only this pyramid, it's actually covers 3 domains. I think Sifu, he mentioned before. It covers the cognitive, affective, and psychomotor domain. But for the benefit of today's topic, we focus more on the cognitive side. So the major focus is to development the knowledge and the intellectual skills. Okay. And it's contain 6 levels, as I mentioned earlier. 6 levels. So remembering, understanding, applying, analyze, evaluate, and creating. So I will be revisiting the earlier parts of ARTT, whereby it used the fundamental bottom 3 of the pyramid, which is the purple color, the remember, moving up to understanding, and to the applying. I believe now we are at the system thinking. I think is more at the analyzing and evaluating levels. Am I right, Dr.Thiti?
Yes.
Yeah, so we do the basic one first, and it also takes some time.
Yeah.
Yeah,
Thank you.
okay. So to summary this pyramid, right? So inside this pyramid, and you can see the terms been using are all verbs, which means words of action. Okay. So it initially started for educators, right, to lead and guide learners by using these verbs. Okay. So actually there are many verbs. I go through all the papers, but I think Sifu very amazing. He simplified all these words as much as possible for our easier learning. Okay, so I show the next slide here. Okay, so this one example of the verbs. So sorry for the design, inverted the pyramid, but you get the idea. We always start from the bottom. So it's the remembering level. So we memorize all the components of ARTT, right? Like the knowledge and the theory required for us to analyze in the market. Okay, then move up is what is the understanding. So which means is what we understand about what we remember. Okay, also it's more of making sense of what are the components really mean. And also like earlier when Sifu and Aileen, she shared about the interaction between the components, right? The like the multi-web thing. Yeah, so that's part of it. The starting point of it. So we making sense of the facts gathered during the remembering stage. So moving up to the green part, which is all we like to do when during trading, right? We like to jump here, jump to this part, what you call the applying part. So we like to apply the new things that we learn in the market, right? They will learn from the methodology in the market, right? So actually what this level means is applying the knowledge and the concept at the best way possible. Like for example, in trading, right, we know, for example, what is the context, what is the appropriate chart and time frame for us to apply in the market. Okay, and moving up to the top three, right, we have this one, the analyzing. Analyzing is we analyze our application, what we apply in the market, for us to reflect on what we did in the market, what are the results. Okay, and yeah, and also the components that we apply, right? We give analyze how they require interact based on the situations accordingly. Okay, then to the middle one, the orange color is evaluating. So we assess, we judge our the conclusions about the information, right, generated from what we applied. Okay, whether it's true or not, with strong reasoning. Okay, so we can see the keywords are critique, test, defend, and criticize. And the highermost part is creating. So after from remembering, we then understanding, then applying, analyzing, and evaluating, right? So the top part is we will create something new, as you can see here. Use all the information to create something new, like we set up all the hypotheses, we push assumption, all this kind of thing, right? So we test it, we design, we test, back test, everything, right? So when we come up something new, then we are at the creating level. So we create a unique framework from the actual application of, like for example, the new module or new idea for trading methodology. Like for example, we started from the first level, each the version 1, then is version 2. Okay, then after that, I think what's the next thing already? After the version 2 is yeah, I think we are slowly moving to the third phase lah. Okay. And yeah, and also besides on creating the new things, right, we also contribute back to the society lah, on what the new ideas and methodology we have created lah, and hope to help other people lah. Yeah. Okay. So after briefly explaining the Bloom taxonomy, right? Yeah. So we move on to Bloom taxonomy. Okay, when applying with the ARTT methodology. Okay. So move on to the components, right? I believe that most of us are already clear with the main components of the ARTT lah. Okay, so this pyramid is representing the hierarchy of the methodology. So the highest one has the most priority. So starting from Dow's theory, then Y component, Fibonacci, and the bottommost is candlestick, right? And covering the whole ARTT is power, because power it used to be at the most highest of the priority of the ARTT components. But because power is more like abstract, and it requires a very huge time frame for us to apply, because for my own personal experience, right, when applying power in our daily chart, in our hourly, in smaller and smaller time frames, yes, we know that smaller and smaller time frames it will give us more error, especially power. So sometimes when we apply power in the same time frame, I think that is not that accurate. So now it's being used in a higher time frame. For example, in weekly or the monthly chart or the day chart, you can zoom out as much as possible Okay. So another reason that the power is not in line in the hierarchy as I show here is because that Dow theory, Y component, Fibonacci, and the candlestick you can apply at the same time frame as I mentioned earlier. So power you require a minimum of 3 months 3 months per power loop Okay, so loop 1 at least 3 to 6 months, loop 2 also another 3 to 6 months Okay, so we move on to the next slide. Okay, so first we move on to Dow theory. So as we already know, Dow theory is from Charles Henry Dow. So he written a book called the Scientific Stock Speculation. I think Sifu also recommended me this book, and I read it, and I think is the way the book is written, right, is more of his experience, and when he talk about trends and all those kind of stuff, I think is very conceptual at that time. And even when we read it back, right, so he just only mentioned when the price, when stock is when the stock is very bullish, means that it's keep on going up. When the stock is bearish, it's keep on getting down, moving down, something like that. Yeah. So from there, we came out the definition for the Dow theory in ARTT So I will share later. So moving to the basic rules of the Dow theory in ARTT is that we follow a three rules and 2 structures. So by now we already should be remember by heart. The 3 rules of the Dow theory is market discount everything, which means the chart absorb all the information. Market move in trend. Market move in trend means that we can apply by looking back in the past and the present data, right? Present market action, then we can forecast the possible future price movement with scenarios. Okay, then the third one is the cycle always repeat, which means in repetition of price movement, right, and the cycle, right, it allows us to know that where is the market status now, and from there, deeper layer, right, is that we can do money management accordingly. So, for example, when the market is trending up, then we know is to buy. When it's trending down, then we cycle is trending down, then we know to sell. When it's sideways, we do nothing, or we do short-term trading, so and so on like that lah. Okay, so we moving next to another slide. Okay, so I've summarized the Dow theory, right? So its intention is to identify a market trend in ARTT. Then there are the two structures. Okay, just now was the tree root, now is the two structures. So we have a trend and the non-trend. So trend, we have uptrend and downtrend. Okay, here, most importantly, we have the 4 points. For example, here we have the low, high, higher, low, and the high, 4 points for trends. And the non-trend here means sideways. Sideways, we have the ascending and the descending. So yeah, also here the 4 points. So most importantly, another thing for Dow theory is that is for identifying the majority, the market trend, and we set the necessary action accordingly. Okay, so for example, in uptrend, we plan to buy, downtrend, we plan to sell, and for non-trend or sideways, we want to sell at resistance and buy support. Yeah, okay, so the next slide is I want to talk about the pros and cons for Dow theory from my personal point of view. So Dow theory, the first benefit is it is a very basic and a fundamental thing to be memorized by the technical analysis, right? The three rules and the two structure is a basic that we need to know. Okay, then by using Dow theory, right, it's a first step for us to analyze the market Okay, and the third one is use a very minimal information which to identify the trend by using 4 points only. Okay, and the cons for Dow theory, right, is sometimes also forget forget the definition of the three rules, and because of this is the first step of the analysis, right? So our results may be deviate if we read the chart wrongly. Okay, if we like focusing on the minority movement, right, or the insignificant ones, it will cause us to give an inaccurate analysis starting from the first step. Okay, and the third one is I think most of us sometimes we tend to forget is we may emphasize priority in smaller time frames instead of the bigger ones. Like for example, we look through the chart movement and the signals, right? Like for example, if you want to apply the Dow theory, and this will give us also error. And lastly, one of the downside for the Dow theory, right, is it cannot elaborate about market emotion. So like for example, like why sometimes price will continue to move up and will not stop, but sometimes why price will move a certain way, then you reversal. So and give a very large retracement or very huge rebound from a downtrend. Yeah. So we want to know what's the meaning of it. And is there a way for us to compare them? So we need further more information for us to verify that. So because of this last weakness, right? So that's why we have another component to support it, which is the Y component. So Y component is derived from here. On the right-hand side is the Cartesian coordinate. So here we have the Y-axis and the X-axis. So in ARTT, right? So if price the majority movement, we use the Y-axis to name it lah, and the minority is we use the X. Okay, or just now, Sifu and Aileen, they mentioned about the dynamic X. Okay, so again, I summarize for the Y component. Yeah, so Y component is used for identify market emotion. Okay, what does it mean? It means that when we compare the first majority and the second majority, right? Majority movement, and we can know what is the difference between them. Okay, so like for example, when we compare the first round and the second round is more longer than the first round of the majority, so we call this as a strong trend. In other words, when the first round is more than the second round, right? So we call it a weak trend. Okay, so uptrend. So the definition is have chance to move up. Downtrend is have chance to move down. And so there's two possibilities after that for the strong trend. So it will retrace or move up, and sideways or move up. So I have a summary for here. And the weak trend is have chance to give significant retrace. Same goes to the downtrend here. Okay. Right. Okay. So I think it should be clear, right? Okay. So now we move on to the next one. Okay. So for the pros and cons for Y component, right? So one of the huge benefit for Y component is that it can compare the emotions of the majority. So based from there, strong trend it indicates price have chance to rebound in, let's say, in an uptrend, or to continue to moving down or retrace is for the downtrend. So from there, we can set up our plan to buy or sell. Like let's say for the strong uptrend, right, we can plan to buy when price retrace, or in strong downtrend is we sell when price rebound. Okay, so moving on to the weakness of the Y component, right, is that you cannot apply it in a sideways, obviously in non-trend. So yeah, we need the minimum the information of the higher high and the higher low, right? Yeah, so this is the one of the big point of Y component. And another huge downside for the Y component, right, is the trend strength is unknown. We never know. We only know that the emotion, which is the first round and the second round, comparing the difference only. But we don't know when in future how you're gonna do. Whether the price will continue to rebound, or the price will continue to retrace, or when it will give a significant retrace. So based from here, we apply another component, which is the ARTT, the Fibonacci target. Okay, so from here, Fibonacci, for today here, I will explain using the Fibonacci target lah. Okay, so Fibonacci target, we use this for measuring target the strength. So before we go that, right, refresh a bit on how we derive to measure the target, right? So always we start from the comparing the time between the demand and the supply. Okay, the demand and supply, and the demand and supply. So the T, it means that the time needed for the buyer to move price up, for the green color line. Okay, so for the red color lines is the time for the seller to drive price down. Okay, so we begin from the left one is we can see buyer is more is less aggressive than the seller. Buyer is equal to the seller in the middle, and the right one is the buyer is more aggressive than the seller. So from there we can push assumption that what level that the price can, I mean the target can be hit. So from here, okay, we can set up the target. For example, T1 more than T2 is 0.618. Okay, then equals means target is 100, and if the buyer is more aggressive than the seller, T1 less than T2, the target is 1.618. Okay, I think this we should remember by now. And moving, yeah, no question, right? Okay, so we move up to the ARTT table, right? Okay, so here is the basic idea lah. If we want to merge between the heat up and heat down, so here we have four of the quadrants, the examples here. So if heat up and heat down is so heat up and heat down, so market have chance to move sideways in future. So this is very important, the definitions. Like let's say not heat up and heat down, not heat up here and heat down means price market have chance to move downtrend in future. Then here is not heat up and not heat down is sideways. And moving back to the left here, yeah, is heat up and not heat down means market has chance to move uptrend in future lah. Okay, yeah. So this one also the definition is very important because when the market is moving, right, and we need, and it demands us for a very fast analysis, we need to remember this table lah for the definition. Okay, and next is yeah, for the Fibonacci, right, and for by now we know that the target if not hit, what happened, and is hit is what happened. Okay, so hit target means that trend continue. Yes, this is very important for us later when we want to apply it in the remembering level, right? And also same goes to the non-hit target lah. So means that the trend will difficult to continue lah. Okay, so by using this, right, we can set up the benchmark as the target. Like for example, for profit taking or correlate with the previous support or resistance lah. Okay, so yeah, this is the idea. Okay, so moving a bit advanced is the three color theory lah. So three color theory is used for measuring also measuring for the Fibonacci target, but we want to identify, right, the real significant movement, or to make it simpler is we call the significant X lah. Okay, because when we know the significant X, then we can push the 3 points, which is A, B, and C, right? We can push the point A, B, and C. Then we can measure target accordingly. Same goes to the downtrend. Okay, so the idea of the three color, right, it derives from three weak trends, always starting from three weak trends. So because this one we are giving the reverse view of the three color, right? Because the black color is that we want to measure the true target. Okay, the true target. So in reality, right, market start from the red color first. Okay, start from the red color, then the blue color, then the black color. Yeah, so this is just a reverse construction of it lah. Okay. Yeah, so far so good. Okay, so for Fibonacci, right? Also personally, I think that there are also benefit and weakness too. So the first one, the benefit is when we know the market strength, right? We have more confidence to hold position, like let's say for the long term lah. Okay. Yeah. So compared to only apply Dow theory and Y component. And the second benefit is it gives us a target for short-term traders to take profit. So sometimes traders they confuse like I entered already, but I don't know where to take profit. So Fibonacci target, right, is a clear and accurate Fibonacci target allows us to take profit first, because from my experience in applying and trading in the market, right, sometimes it's really especially for those very highly speculative and very highly volatile stocks, right, it's best to take some profit first, because from there we build up our equity, right? So when we trade for next round, we have more free equity for us to hold position or whatever. Okay, because when portfolio is growing and growing, right, that's what we need Okay, and we moving to the weakness for Fibonacci target, right, is that it lack a bit of the psychology for us to know whether it will hit the target or not. Okay, like sometimes the price hit target, but show the retrace, right, more than the previous X. Also, like when price not hit target, then show off a retrace or a rebound. Okay, then continue to move down. Wow, so sometimes we only apply like Dow theory, Y component, and Fibonacci, right? So we need to add some idea into how we measure that. Okay, so the second weakness is that it cannot apply without identifying the market direction first. So sometimes I see like my friends or some trader, right, they measure the Fibonacci, they just plot and plot. But when asked about, so what is the overall trend for this and that, right? For the chart or the picture that you're looking at, or some cannot answer, but they just plot for the Fibonacci, because it's now technology is very sophisticated, right? You just pull one Fibonacci, then they give you all of the levels. Then from there, they say, I want to forecast which is the support, which is the resistance, this and that. Yeah. But most importantly, we must know what is the market direction. So when we synergize between two or more than two different components, right, it will increase our accuracy when we want to analyze the market. Okay, so it also suffers the same what you call the weakness. Like for example, in the Dow theory and the Y component, right? If we don't know how to focus on which is the significant movements, right? So like for example, because in Fibonacci target, the most importantly is we must know how to count the candlestick, okay, between the buyer and the seller, or the demand or the supply. So sometimes I found that some the T1 or the T2, right, the candles sometimes, because a different one candlestick, it gives us different types of target. Yeah, for example, the T1 there maybe and the T2 difference one. Yeah, so it will, if less, then the target will become 1.618. If it's become more, then it will become 0.618. Yeah. So I think if we found this kind of problem, right, so which means that we need to consider whether we are looking at the appropriate time frame or not. Like just now, Aileen, she shared the what you call the time frame for us to analyze. Right, for example, we move from daily, weekly, or the down hourly or 50 minutes. Yeah, for that we need to consider . Okay, I think that's the Fibonacci part, and we move on to the final part. No, the second final part, which is the candlestick . So candlestick for ARTT, we have continuation and reversal patterns. So continuation is the what you call, continuation is here is a head of gangster or HOG, and reversal pattern is the pattern A . Okay, so yeah, move on to that. First one is a continuation, which which means is the head of gangster. So I believe all of us here is clear about the story of the name, right? Yeah, so and just move on. So here,
Hey, T,
yeah, yeah.
can you repeat the story?
I knew it. Okay, okay. Moment. Okay. Sorry if my drawing sucks. Okay, so the story started with, let's say, when we highlight demand or supply, right? So it's like we are drawing. Hey, sorry, moment. Give me a sec. Okay, we draw the apartment. Draw the apartment. Okay, this is the first floor. This is the oh, this one is the green.
Yeah, correct. It's correct. Oh, no.
But buyer is maybe starting from the seller one better.
Yes. It is behind the story when I give talk in Japan. Yeah.
Okay, so we starting from below. So here is the first floor. This is the second floor, and this is the third floor. Okay, so this is the rooftop. Sorry, the drawing is a bit crude. Yeah, so let's say the candlestick, right? It's the what you call the head of gangster. Okay, so moment. So the head of gangster, I draw a stick man first. Okay. Okay, so now what we want to do is that we want to know the resistance or the aggressiveness of the seller, right? So let's say we are here, we are down here. Now, okay, now we have the gun here.
Gunman.
Gunman.
Want to kill
What?
H of gangster, right? Yakuza.
Okay. Yeah, so okay, because in the beginning for the head of gangster, I believe is for entry, right?
Yes, for buyer to how hard buyer to kill seller.
How the buyer want to kill the head of gangster or the seller lah. Yeah, so if the head of gangster is at the third floor, then think of us as a person if we want to scale up the first floor, then move up the second floor, and only reach the third floor, right? So buyer need more effort to overcome the seller or to kill the head of gangster lah. Right? So like for example, let's say if we go back to the moment if we go back, okay, so let's say if now the price already moved down here, okay, and now the buyer want to rebound, right? Or buy back, right? So buyer need more effort to reach the head of gangster here. Okay, yeah, so this is the idea lah. So when we move on to the second floor, right? So second floor, if the head of gangster at the second floor, right? So less effort for the buyer to move up to second floor to kill the seller. But so we can say the seller psychology is so lah. Okay. Need less effort for the buyer to rebound and kill the seller. Okay. The last one is the head of gangster at the first floor, right? So the seller, we call it less aggressive because the buyer need less effort to kill the seller. Okay, to kill the seller here. So yeah, so there's another name for this word, right? So we call it wash and rinse. I will show you later. And we move back to the buy side here. Right? So the buy side here, we just flip the red color, the seller one into the buyer one. So for the buyer one, at the buyer if at the bottom, right, means that it's at the support. right here support, because it's the lowest, right, at the price here. So which means that the buyer here at we call it at the third floor lah, or the lower floor here, which means a buyer is, the psychology is very aggressive. And moving on, if the second floor, right, same lah, goes to the seller is psychology is so. And if the white head of gangster or the green one is at the top, right, so which means that it's near the resistance already. If let's say this is the highest point lah, okay, it's the highest point. So which means that seller is very easy to kill this white head of gangster at the first floor lah. So we just inverted the name only. Okay, yeah, I think that is the story lah. So we move on to the wash and rinse. So wash and rinse, we all know that this is for us to know that whether for this case is the buyer can again can kill the seller or can wash and rinse the seller or not lah. So if we found here from the left, right, we can identify, like, let's say a potential head of gangster. So we push the first criteria here at the second step here. So here we can push into two different possibilities. It's either the buyer can hit the first criteria, or the buyer totally cannot wash and rinse. Okay, so if cannot wash and rinse means if let's say the retracement here is still a very strong trend, or the seller still very aggressive, right? So trend will continue. Okay, so for here, at the top here, so we entry at the first criteria and put the stop loss. So from here, we have three different possibilities. It's either price will run away up after hit first criteria, that means a successful wash and rinse. And in the middle here, hit the first criteria, retrace, but not lower than the stop loss, but and continue the rebound. Or it will hit the first criteria and will stop loss. Will move to lower than stop loss or previous low lah. So which means that if we really found this type of the stop loss scenario, right, it really means that we need to recheck and reevaluate whether we entered at the correct time frame, which means are we focusing on the too small of what you call too small of a time frame, or are we applying this in a minority movement lah, instead of the majority one? Okay, yeah, so that is the summary for the wash and rinse. And next we move to the reversal or pattern A. So pattern A, this one is derived from the derived from the physics theory, right? So here we have the action, the center, and the reaction. Okay, so this is for the reversal down, and bottom here is the reversal up. So we can see again action, center, and the reaction candles. So for the main point for pattern A is we apply for either entry, and we want to buy as low as possible or sell as high as possible. Okay, so always to have 3 candlestick, but also there are cases whereby at the right hand side you can see here, they are, I mean, the world is not perfect, right? Sometimes candlestick, it won't appear 3 for the pattern A. Sometimes it will give more. So here are the requirements for the pattern A. You can see here, so the rule is always within 7 candlestick. If more than that, which means it's sideways already lah. Okay, and yeah, the first candlestick we can apply because it's above the water line or the shadow or the cloud line. Yeah, we plot on the top of the body of the center candlestick, right? The red line here. So number 1 we can use. Number 2 cannot, is because that here we want the bearish candle, so it's must be red color for this case. So the second candle cannot, the third candle cannot, is because that covered by the line covered by the line equal 50% or more lah, so cannot use. And here the rebound must be a bullish candle. Yeah. So, and also if the shadow is longer compared to the body more than 3 times, yeah, so that one we cannot apply lah. Okay. Yeah. So the 6th one we can apply because it's no more than 3 times comparing the ratio of the shadow to the body. Yeah. So this one is the basic one. So next one is we remember the different definition for the different types of the pattern A. So we have a neutral, we have strong, we have weak here. So strong one is have chance to move higher or lower than previous high or previous low for strong reversal up. Weak reversal is low chance, but doesn't mean no chance. It means low chance to move higher or lower than previous high or previous low. Neutral is no emotion. We cannot tell. It's like sideways. We don't know. Don't know whether this can point a direction or not. Okay. So yeah. So this is what we need to remember. Oh, sorry. And so pro and cons for the candlestick is candlestick provide additional context for our signals. And pattern A allows us to enter as low as possible. And yeah, and if we apply hit of gangster together with pattern A, also give us more confidence because when they work together appropriate and accordingly, right? Yeah, if give us a more meaningful analysis for the psychology. Okay, so the one of the downside for the applying candlestick, right, is the least priority. And most people like to apply it first when looking at the chart or analyzing the chart. Yeah, so that one we need to remember. And the next one is sometimes if we look or we read chart every day, right, we might found sometimes these points of entry and the point of stop loss it will give us very huge. Okay, like for example, sometimes when we look at smaller time frames, right? Like let's say there's an event happen or don't know what trigger the market to move very volatile, right? Sometimes it gives a very, very, very long head of gangster. Sometimes like let's say we monitor the candlestick, like let's say hourly, maybe it's like 20 points or 30 points or between there lah. But sometimes when event happen, right, wow, it give us like 50 to 100 points candlestick like that. Wow. So the distance for us to enter at the first criteria and the stop loss, right? Wow, it give us 100 points. And yeah, so to overcome this kind of problem, right? Yeah, 1 minute 100 points. So yeah, so that one is very extreme. So yeah, the advice is we either we don't do anything or we move to a lower time frame or we observe first. Or if you really want to try your luck and you have confidence in the overall structure of your analysis, right? Let's say you are confident this is a uptrend, a strong uptrend, and it already hit target. It's just that the retracement is very deep. The retracement is very aggressive, right? With the show of this kind of very huge head of gangster at the bottom, you can speculate to long or you can speculate to buy, but always remember to keep a tight stop loss. Yeah, so this is advice. So next is to calibrating the chart. So with using the chart, so starting from the bottom here is we have a 24 hours product, we have a non 24-hour products like stocks or indices or whatever. So we start from daily, then we move down to hourly, 15 minutes and 5 minutes. If there are 24 hours, right? Yeah, we move from daily 4 hour hourly to 15 and 5. So you can notice there's a pattern here of jumping down the time frame or moving up the time frame, right? It's because that we're using the rules of 3 lah. So we divide the time frame by the factor of 3. Dividing by the factor of 3. Factor of 3. Yeah, factor of 3. So yeah, that derives this because there are many types of time frame when we select in the chart, right? Yeah, sometimes we don't know which one is significant, sometimes which one is accurate. Some they like to use like what I also met people they like to use a 3-minute chart or 3-hour chart or 2-hour chart. I also don't know why, but but yeah, it's up to preference. But this is the rule we set in ARTT for us to analyze accordingly with the time frame, right? Especially when we want to find the meaning, the interaction between the different time frames. And the top here, what's the meaning factor of 3? So let's say, right? So let's say, for example, from daily, right? Daily we have 24 hours. Okay, 24 hours. Then we divide by 3. Yes, we divide by 3. Do we do so from there we use, from that is 8 hours, right? But do we use 8-hour chart? No, we don't use 8-hour chart, right? Yeah, so we divide. Yeah, so we move down accordingly lah, so you can do the calculation lah. Okay. Yeah, so for the low liquidity products, right? Personally, I think we start from because all the chart we start from daily chart, right? Yeah, so start from daily chart, then we move up to because sometimes because low liquidity, all the candlestick will be very, very small. Then we move up to monthly and weekly and 3 months and so on. Yeah. Then we move to the last component, which is the power. Power is the ratio between the demand and the supply, right? Again, so I summarize for the power. So starting from the top is top to the bottom. So we have a power up, power down. So we got power up or not, we got power down or not, yes or no, yes or no. Yeah, so the definitions are here. So this is the definition, or we need to remember. So got power up means that price have chance to move to break above previous high, or no means that low chance to break above previous high. So same goes to the down to the power down also lah. Okay, so down here I have the calculation here showing demand, first supply, divide if it's less than the second demand and second supply, right? Okay, so yeah, so here we can more than here. So yes, we can know whether got power or down or not. Okay. Explain all 8 patterns. Oh, you mean the cycle of wealth, is it? Explain all 8 patterns in the 8 market cycles. Okay. Okay. Let's say give me a second. Let me change the screen first. Okay. White screen. Okay. So to make it brief, so for the excuse me. So when we start from the beginning with here of time, right? So cycle of wealth, it means that when we start, right, we start from sideways. Okay, start from sideways. So when a sideways, when it gives, here we got power, right? So this one we call star steps. So star step and then move up next one, right? So here change to become uptrend. Okay, uptrend. So uptrend here we call it pattern B. Okay, pattern B. And if the price not retrace, I think it's retraced above than 0.618. Yeah. So then continue moving up. Continue moving up. Maybe my proportion is not good. So here become a weak trend. Okay. So after weak trend, it will show at the top, right? It will show 2 types. Okay, you draw here. Sometimes it will show boomerang or it will show old man. Okay, boomerang means remember correctly is break above previous high, or if okay, let's say this is a big trend, right? And it cannot break above previous high and it move down, right? So this is the old man, and this is the boomerang. Okay, then when market start falling down, right? So here we call rolling stone. Okay, so rolling stone after that is like a mirror of the when moving up that time lah. So will become a strong downtrend. Okay, then it will go back to the norm lah. Then become sideways again. Then when the time comes, and time allow, then it will come another star step. Okay, Mon, did I explain this correctly? Okay, move to the question to, okay, welcome. Okay, so move to question by Melissa, right? Okay, supposed to do with 8 hours. Okay, so what time frame to use? When supposed to do with 8 hours. So, okay, so in a normal trading session, if correct me in my wrong lah, it's usually 8 hours. Correct? It's normally 8 hours. So when we want to divide by 3, right, to move down to the next smaller time frame. Okay, so if we divide like this, 8 divided by 3, right, we get 2 hours, 2.67 hours. Does your chart have 2.67 hours or not? And if let's say we take 2 hours lah, the nearest one 2-hour chart lah. Okay, so for this stock, if we want to trade for 2 hours, right, one day is only 4 candlesticks. So based on 4 candlesticks, right, can we get a meaningful analysis or not? I don't think so lah. Okay, so that's why we move to the next lowest and for the majority of the trader use, which is 1 hour. Okay, so from 1 hour, if it's liquid enough, then can apply. Okay, if from 1 hour we want to continue to move down, right? Okay, so which means that we divide by 3 again. So means that 60 minutes we divide by 3. Then it's 20 minutes. But it depends on you. If you use 20-minute chart, then it's up to you. But the nearest most of the people apply is 15 minutes. 15 minutes. Yeah, and I believe that 15 minutes to apply in stocks is not really that liquid lah. So sometimes you give error. Okay, so for stocks, if really got liquid lah, lowest can go is 1 hour. Always start from day. If you want to if you want to entry, then you can use hour lah. So means that you start from day, then you can move lowest to 1 hour. Okay, if liquid enough. Okay, if not, if day is illiquid, right, then you have to move up to weekly. Okay, then if weekly still cannot, then you have to move up to monthly, then to 3 months. But if really this is the case, right, which means that this stock is really illiquid lah. If weekly and monthly you cannot apply, or it's a new listed stock. Okay, hope I answer your question, Melissa. Okay.
AT,
Yeah.
can I share some idea? Yeah, about to give answer, right? why we apply, why we divide by 3 or something like that. Can you delete some space in your screen?
Moment, oh, okay.
Okay. Okay. Can you see my drawing?
Yep.
Okay. As you know, right? I'm got 2 master degree. Okay. One is electrical engineering. One is education. The major is measurement and evaluation in education. Right. On that time when I got this both master degree, right, in the same time, right. On that time I work as a electronic trading manager. That's why I interesting some information after I contract for my customer. Right? That means I do the research based on brokerage house customer and to get the both of 2 master degree. Right? When we collect the data, right, from our customer, we found many information that quite interesting, right? Because one of the question that I always ask our customer is, hey, what is the time frame that you apply, right? That means when we accumulate the data, right, we also saw this information. For example, when we ask a speculator, right, hey, what time frame you apply, we found that 15 minutes, right, is a high frequency answer from our customer, right? And maybe this is 10 minutes or something like that. That means from this kind of data distribution, right, we also collect this information, right, to become set up our rule, our criteria. That means if you want instant noodle to apply, right, you just follow the rule that we give to you, right? The time frame should divide by 3, something like that, because we want to tune up like radio frequency, right? When you adjust the fine tuning, right, you found that if you not tune your channel correctly, that means your signal is not clear. That means if you are open FM radio, your voice is not clear because you not tune the right frequency correctly. It's same as a trader in the market, right? If you not tune up to the right high frequency of trader that trading in the market, that means the information that you get, right, based on amount of candlestick that can reflect to become your chart pattern in future may be not correct. This is just information that I want to add. The information that divide by 3 just instant noodle for you to understand. But behind the scene, it comes from my master degree research that from when I work with brokerage house in Thailand, maybe 20 years ago, I think. Yeah, thank you. Yeah, T, continue, please.
Yeah, I think moment. Okay, yeah. Do we still have time? Let me see. Okay. Yeah. So, give me a second. Doctor, do we still have time for scenario? Because I think 1 hour already. Do we still have time?
Hey, we have no problem. You also can manage your time. Yeah.
Oh, okay. Okay, so that's the last the component for the one the power. So I've a case study I've been compiling. Okay, like let's say we want to apply in the market lah. Okay, so like let's say because recently I interested in looking in the finance industry, right? But I lazy to look at different type of banks or financial institute. So I try to push our knowledge into this finance index for the Bursa, right? Okay, so let's say we open the chart, right? Because of limitation, it's not in day chart, so I cannot see most of the information. So I focus back to the weekly chart, so I can see the overall trend here. Okay, so the overall trend here we can see is moving up, but there's a problem here because that the candlestick is not clear. So that's the first sign that you are focusing on the lower time frame if you want to analyze the whole big picture lah. Okay, so what we do, we move up to a higher time frame is the monthly chart. Okay, so now we can see clearly where are the emotion or the psychology, where is it? Okay, so when we try to derive the pattern, the signals by using our methodology, right? Okay, so first we draw the line. Okay, then when we draw the line, right, we found that this chart, where's the high, where and the low is, so it like highlight to us which is the important to see. So when we move on next, then we found that in the middle part, right, the middle part is actually here. We can merge it. Okay, we can merge it into a single blue color line here. So actually we can see here is looks like uptrend here lah. Okay, so then we put into the classical, I mean the first Bloom, I mean using the Bloom taxonomy, the ARTT, right? We start from the bottom, we set up the different components here. As you can see here, the Dow theory Y component, the X, the Fibonacci, the head of gangster, and the power. So we fill in one by one. So starting from the left, the bottom left here is the Dow theory here show is uptrend. Then go back to the chart, we found that when we push the move up to the next component, which is the Y component, we found that this is a Y1, Y2, and maybe this is a Y3, but we want to know whether it's finished or not. And also the same time, we found that the second X is more than the first X. Okay, then we also found that this one looks like the three color theory here. We label as the point number 1, 2, and 3. So maybe the 3 is not finished, we don't know. And also the Y3 is also not finished yet. Okay, and also the 0.4, 5, and the 6 is not here yet. Okay, so we tabulate inside the table in the remembering level. Yeah, so we write here is last Y is longer, which means the definition is price has chance to rebound. And another observation is the three color, which is price is potentially at the 0.3. And the X here is shown is X1 is smaller than X2 or X2 is bigger than X1. So which means compare the seller psychology, right? Seller is more aggressive. And we move to the next component, which is the Fibonacci. Okay, so then we measure. Okay, so T1 more than T2 is target is multiplied by 0.618. And we also measure the target down, the red color here, A, B, and C. So we found that T1 is less than T2. So which means that the 1.618 target down is very, very far at the down here. Okay, then we populate it again at the Fibonacci here, not hit up and not hit down. So recall just now the table, not hit up and not hit down, which means market have chance to sideways in future. Yeah, so I write down the definition here. Okay, then we are looking for the emotion. So next, we looking for the emotion, which is back here is passed already, but we focus in the dotted box here. So we can see, we can find black hair again. I mean the black hair against at the first floor and the one at the third floor at the bottom here. Okay, so a weak seller versus a aggressive buyer here at the bottom. Yeah, and that's the candlestick you can see. So the question is, can whether the bullish drive price to hit target up or not? Okay, so what we need to do is we zoom into the last movement. So which we want to do is we drop the time frame from monthly to weekly. Yeah, and also the final thing here in the chart, I label here loop 1, loop 2, price retrace more, price retrace less, which means got power lah. Okay, populate the head of gangster here. Black HOG versus the white HOG, buyer more aggressive than the seller. Okay, and also we did wash and rinse the black head of gangster lah. Yeah, so and if the seller want to against the white head OG, which is difficult, it's tough. Okay, then the power here, right here, there's got power up, so price have chance to move higher than previous high lah. Okay, so next, after we collect all the signals and the information based on the chart by using our remembering level, right? Then we move up to the understanding, which we combine the different components to give more meaning. Like for example, we combine the Y component and the X, right? Okay, when the last Y is longer, which means that the Y2 is longer than Y1, and the seller is more aggressive at the same time, right? Let me draw the, okay, like just now is okay, so just now was is a strong trend, right? But when the X2, right? Oh, maybe I draw it too long. So when this is X1, this is X2, right? Okay, so when the X2 is more aggressive than the X1, so when next round when price want to rebound, it's take time and very difficult and very slow. Okay, price will difficult to run way up because the seller is very aggressive. Okay, so we move to the next understanding, which is using the Y component and the Fibonacci. Okay, when we merge these together, the idea, so I derived that price may swing sideways. Okay, but because of this sideways is no winner and no loser, right? No winner between the buyer and the seller, right? And I look to the target up and the target down. The target up just now was the 0.618. It's easier to hit compared to the target down at the 1.618, right? Yeah. So this one is easier to hit lah. Okay. And the Fibonacci by using the 3 color, because 3 color is using the weak trend within the weak trend, right? The Y component and merge with the Fibonacci. So we found that 0.3 is not yet complete and we didn't see any reversal there of any price stopping there. Yeah, and also not hit target. So it's a bit of a stalemate. We haven't still know who is the winner yet. Okay, so move on to the next understanding. So from head of gangster, right, we found that the price has already rebound from the wash and rinse. So what we need to do is to check any weakness at the last movement. Okay, and moving to the last part of the understanding is when we merge the Fibonacci and the power, right? Fibonacci, we found that not hit up and not hit down, and the power got power up, right? Okay, so the power up's minimum target, the power up's minimum target is the previous high. And this previous high is the same level, almost same level with the target up of the 0.618. So I think that this might be a potential resistance for price to arrive there lah. Because so far bullish, I mean the buyer haven't shown a very aggressive at the top, right? And some more the candlesticks is getting smaller and smaller at the top here. Okay, then from all of this understanding, right? Understanding of this derived from the remembering from the theory, right? All these meanings, we can further narrow it down to make it the essence for the applying, which is of what is our strategy, what we plan to do. So what we can found here is it's actually dropped to a lower time frame lah, to weekly chart, and verify the rebound is finished or not, and can hit the target up or break previous high, because we found that the previous high is the minimum target for the power, and is the target up correlates with the target up lah. Okay, so maybe a resistance there. Okay, so the next thing, we drop time frame to weekly chart, and what we can find that is, yeah, there's a movement here. So next we label it accordingly. Looks like an uptrend. Okay, so we label all the necessary Y components to give us more information. So here we can see that the Ys are getting shorter lah. Okay, then next I also found that here also correlate with the big time frame. You also show the three color theory here, so we can see here 0.123456. Okay, and the price here rebound after the 0.6 already. Okay, then we merge all the lines together, and it still show this one is last Y is longer, and actually the X1 and X2 is not really much of a difference, but it rebounded at the zone number 1 lah. So all this, we collect the information, we put into the table again. So Dow theory is uptrend, Y component last Y is longer after merge all the with the three color, so price have chance to rebound. And the X here is buy zone 1, which means buyer is more aggressive. And next we measure the Fibonacci, so the target up also very near to the big time frame target up here. Okay, so again, T1 is more than T2, then point A, B, and C, target up is here. Yeah, so here I put is not hit target up yet. Trend difficult to continue. And move on again is using to look at the X here. Okay, so after looking into here, right, then I found that actually if we analyze equally for the retracement here, right? Yeah, so here if we merge the lines and accordingly, this shows also another similar pattern that we discussed earlier. So it's same as if the last Y and longer, then the retrace is significant, right? Then the buyer here will be very difficult to move up. So what I found is when the retrace here, right, in the red line here, is also showing the same thing. It just only inverted lah. Let me see. So here, yeah, retrace, then here give a very huge, significant rebound here. Here is bigger than here. Okay, yeah. So, and also at the rebound here, I also found there's a head of gangster here. So yeah, and it haven't washed and reset lah. So the seller haven't killed the buyer yet. And also measure the target down of 0.618. So all these collected the information, and I have to split the table into the majority movement and the minority movement. It's a bit detailed. So yes, okay. So from here, after collect all the information, we can move on to the next phase, which is the understanding level. Okay, so understanding, which means here the majority is a strong uptrend and work together with the X2 last Y is longer with the aggressive buyer. So price difficult to run away down. Okay, price difficult to run away down with using Y component and X. And the next one is also using the Y component with Fibonacci. So far, both target up and downs are yet to hit. Buyer and seller yet to prove themselves lah. Who is the winner? So price may moving sideways. Then the next one is hit or gangster. There's a possible weakening of buyer psychology at X2 lah. Because just now the hit or gangster, right? Give me a moment. Okay, the head of gangster, right, is at the second floor here, second to the first floor here, so it's so and quite easy to kill, but haven't happened yet, so we don't know. Okay, and yeah, at the X2 in the minority, then we move. Okay, so power is got power up and power down, so also there's a possible of sideways in future. Then from all of this, right, we can derive the applying level of the strategy. So here on top here we can see there's no clear winner as buyer or sellers can hit target or not. So there are a few possible scenarios. Okay, so price may retrace because the what you call the minority there, the movement, right? It's a strong downtrend, which means the last Y is longer with more bigger X. Okay, so price still might have to retrace, but we don't know whether we'll move lower than previous low or not. Okay, so it's very dependent on the whitehead or gangster here, whether it can wash and rinse or not. So my green scenario is whether price will retrace above the wash and rinse, the whitehead or gangster. So if retrace above, not wash and rinse and rebound, so what we do is we speculate to buy when any positive signals, like let's say for example black HOG appear here and it can rebound, and okay, so means that have chance to rebound. And scenario number 2 is that if retrace and touch the wash and rinse, right, so it may have 50% of chance to rebound. So if you really want to enter because of the overall is a strong trend, right, then suggest is to speculate buy with a tight stop loss. Okay, with a tight stop loss here. And the negative part for the overall trend, right, is that if we retrace, run the way down and wash and rinse the whitehead or gangster, right, and hit the target down, then it's negative for rebound, so we do nothing. Okay, so if I move back, sorry. If I move to, so this is the scenario I created. So you can see here, so this is the green scenario, the orange scenario, and the red scenario. Okay, so for the applying just now. Okay. Yes, so far it's like that. So there's an example and a walkthrough how we go through the original remembering, understanding, and the applying way of this ARTT methodology. So you can see it started very simple, but it slowly, when you tabulate and note everything down, right, it will get a bit complex. But when you put your head together on the meaningful ones, that how you want to merge together, right, so from there you can derive the strategies. Okay, so before I end my presentation, right, so for this ARTT to apply with the Bloom taxonomy, right, so there are also pros and cons. We cannot run away from that. So one of the huge benefit is it, as you can see, it's a very organized and sequential learning. You start from the bottoms up, from remembering, understanding, and applying. And if you advance more, then you can move up into higher. And most importantly, because you write down everything, right, it gives us a clarity in our action on what we want to do. Okay, when we want, what we want to analyze, and what we really want. Okay, so lastly, sometimes scenario doesn't happen to what we plan. So if we got this kind of recording, right, it may allow us to reflect ourselves on our results. Like where can we improve? What information did I didn't collect, or did I push any of the knowledge in the wrong part of the chart or not? Okay, so moving to the downside is this Bloom taxonomy, you cannot jump. When you start from remembering, you must start from remembering, understanding, applying, analyzing, so on and so on. You cannot straight away jump to analyzing. Okay, then you can see the second part there is a bit time consuming for me to write down all of the single details there of all the information that I can capture. And also when you move up the level, right, your thinking will be getting more and more complex. You need to understand on how the components interact with each other. And that's lie very crucially in your remembering levels. Yeah. So the final part of the big point is also because we are human, right? When we want to apply this this kind of concept in our analysis, we also prone to bias. So like for example, let's say when you started, when you're very biased to the bullish side, so you will look the chart in a very bullish way. So your analysis is also very bullish. But when the market is against you, right, then you need to reconsider on your strategies and so on. Okay. So that is my presentation. Thank you for your time. Sorry, I go more than 1 hour.
Wow, very good and impressed presentation. Right? I think after Irene and T, right, finish presentation, right? Maybe we don't have any question, right? Why I push position, right, Irene and T as my teacher assistant, because we already proved, right, the skill, knowledge, and basic, both of them for long time, and we can say that these two member is can become success trader or can become teacher in art trading methodology in future. We don't have question. And yes, we have recording, and we will push the link after the program is finished compiling. And maybe some question may be asked me, right? Why we have two kind of methodology, right, to analyze market? Because as you see, right, the methodology that we communicate with art component, right, from Irene is look simple than T, because we develop Bloom taxonomy, right? Bloom taxonomy is the first version that I want to declare our analysis process, because I don't know, but I'm founder of this methodology, right? I want our student, right, to have chance to work in any part of financial market. Stock analyst is one job that interesting, because after I read a lot of commentary, right, from many broker, right, specific on technical analysis, I found that different people always different standard, a different background of commentary to write the report. Sometimes I don't understand. Sometimes I didn't see the inside process, how they analyze, right? What is the factor that they pick up? Yeah, and this kind of process, right, of Bloom taxonomy may show already all the process of the commentary or report writer to show you, right, what is the factor that they pick up, what is the process they show their remembering or understanding, how they merge all component. After that, how do they accumulate all data to become their strategy, right? This is very important for us to get the result, right? Because if we cannot monitor, right, what is the process, that means we cannot improve ourselves. But this version, right, I want to tell you is may difficult for some member that maybe cannot part remembering or maybe cannot part understanding level. That means yes, when you listen, right, for T presentation, right, you may be confused and you don't know what he talk about. But in opposite way, if you already understand, right, the or definition of art component and you understand how to merge, right, that means it's not difficult for you to understand, right, to get the strategy, right, that he just some summary, same as Aileen concept, right, for system thinking that I just develop and plan, because system thinking is maybe easier in terms of analysis, but still get the same result. Yeah, it is my effort to want to share to all of you about how do we apply Bloom taxonomy and system thinking in ARTT methodology. I hope this seminar may be useful for all of you, right, to apply your knowledge in future. I hope. Okay. And for T and Irene, right, I would like to thank you, both of you, to spend your effort and time to make miracle this kind of
Thank you.
presentation, this kind of seminar. I want to thank you. Without both of you, right, this seminar may be not give perfect like this. Thank you very much. I will write down the certificate to guarantee both of you that both of you can become mentor and qualify. In future, right, if I have the School of Technical Analysis, I guarantee both of you qualify to get master degree on this field for sure. Yeah. Thank you very much, all of you. Right. Thank you. If you have any question, you also can drop me by message. Okay. And thank you very much. Because of I just wake up. That means I cannot make up my face. This card no need to take photo together.
What you say?
I
Wake up?
didn't make up my face. Or you if you want to take photo together, right? Okay, you just vote. Okay, we will open the camera together. If you say no need, okay, just just say goodbye and see you next round. Okay. I think finish already. Okay. Thank you very much. And if you want to refresh, okay, I will drop the link after video already complete. Okay. Thank you. See you next round.
Thank you.
Okay, bye.
Bye.
Yeah. Bye.